Okay. Nice to see you, and thank you for joining. Today with us is senior macroeconomist Joona Widgrén. I hope that I spelled correctly, but you can
Yeah.
also correct me if I'm wrong. And thank you, really, thank you so much for joining. And I really appreciate your time. I know how busy you are and must be. And briefly, very shortly, I will introduce or tell our audience why it's very crucial for our industry to follow macroeconomic trends, because we are driving business and business owners and planning marketing plans for the next year, and we clearly need to understand what's the sentiment, how confident will be the firms with their decisions, how confident will be the buyers and potential clients, will there be some how the business will impact from all these macroeconomical uh, environment, I would say. And that's why when I looked up for our region, as Baltics and Nordics work together very closely, I see that Baltic countries are as a one market, not separate countries mostly. Then I saw that you have prepared our overlook for this 2025. But I would gladly hear what's upcoming in 2026 for us. So thank you again, and the floor is yours.
Thank you. So overall, I think all the Baltic states and also the Nordic states are somewhat recovering in 26. At least we are expecting some kind of recovery. And for the Baltic states, we expect to see around 3% GDP growth. There are a bit differences between the Baltic states, but overall around 3% growth. We are kind of optimistic about next year. We think that especially the domestic demand, so mainly private consumption and investment outlook at the moment for pretty much all of the Baltic states and also the Nordic states looks better than it has been this year or last year. So we are expecting that overall economic growth will pick up mainly because of those domestic factors affecting the growth. Especially the situation of households in the Baltic states, in Latvia, has been improving quite some time, and the real wages have been growing for some time now. And the saving rate in the Baltic states, as well as in Nordics, especially here in Finland, the saving rate is relatively high, meaning that the households at the moment have capability to spend more, and we expect that in 26 we'll see some pickup in private consumption, and then private investments and investments overall. The lower interest rates, especially the Euribor rates, have come down about 2 percentage points from the top. So the lower interest rates will support the companies and the overall investment picture in the Baltic states, as well as in the Nordics, and therefore we expect that the companies will start to invest more next year. Of course, there are some risks around the overall macroeconomic outlook and also the investment picture, mainly the geopolitical situation and the trade war situation. But overall, we think that next year the economies in all of the Baltic states will be better. especially in Latvia and Estonia, where the growth has been pretty much stagnating for some time. We are expecting that the growth will pick up next year, and mainly driven by households, which is of course nice.
Yeah, I had a question. Do you think that companies will feel more confident and will pursue the goals or purchases or decisions planned for 2026?
Yeah, I think there is some sort of an optimism in companies. We have already seen that the confidence indicators of businesses have somewhat improved in the Baltic states, and especially if the economy starts to grow again, I am expecting that the confidence will pick up more, and of course then supporting the investments and that kind of things, and therefore for the situation for companies will somewhat improve. But as I mentioned, we have already seen somewhat of improvement in business sentiment, which is already supporting the investment growth and overall overall growth in business sector.
Mm-hmm. And I was thinking also about these all artificial tendencies and companies maybe releasing some employment. What is with the job market situation? Because from one hand, maybe there is some kind of layoffs, but at the same time, it maybe saves money for some kind of development as well. So maybe there is some balance, but what will happen with this job market is, I don't know, I'm not the macroeconomist, but I have heard that this job market is stagnating, and not only in Latvia or Baltics, but worldwide, widely.
Yeah, if we look the data from the Baltic labor market, actually, the labor market from macroeconomic perspective is actually quite in quite good shape, and actually the unemployment rates are quite low relative to history, and the labor market in some sense is actually quite tight, and it is similar situation pretty much all over the Europe, but not in Finland. In Finland, we have quite high unemployment rate, and the situation is quite different compared to other European, especially Euro area nations. But in the Baltics, the labor market situation is actually quite good at the moment, which is somewhat surprising if we look the overall macroeconomic situation for past 2-3 years, especially in Estonia and Latvia, where the economic growth has been stagnating for some time. The labor market has been quite resilient for this situation. So I'd say that at least from the macroeconomic perspective, the labor market is quite good, and most of the forecasts for next few years expect that the labor market will somewhat improve also in near future.
Okay, and what do you think how these global tendencies are influencing our markets? Do you expect some kind of unexpected situations or some kind of tendencies which will impact us as well?
Well, I think still, for example, the trade war situation or the tariff situation, the US import tariffs, they still remain in my risk list for next year. But after summer, when Europe and US made a deal, and there has been some deals between US and certain countries and economic areas, the uncertainty around the tariff situation have come down quite significantly, which of course then supports the economies in Europe especially. So the uncertainty around the trade politics has decreased during the last 5-6 months or so. So I'd say that it is less of a risk than it was in the beginning of this year. However, we really don't know what will happen next year. It is of course possible that there will be some trade disputes still between Europe and the US, and especially for the Baltic states, I would follow the situation of tariffs on wood and then steel products, which are of course quite important for the Baltic states. But overall, I think the situation in trade politics is better than it was half a year ago. So I would be somewhat optimistic if we look, for example, the exports of Baltic states and the overall world trade. I would be quite optimistic that the situation will improve next year. Then, of course, there are some other major risks in Europe. Of course, the geopolitical situation, the Russian war in Ukraine is, of course, a huge risk for European countries. It could turn out to be positive if there is some sort of a ceasefire or even peace in near future. It would boost the economic growth in Europe and in the Baltic states. But of course, if the situation stays as it is of course a negative thing for European economies.
Okay. Do you see any kind of things which we would need to take into account when we enter this new year? Or do you see that there is some kind of risk factors or cautions to take in mind planning or planning next year? I would say 2 years, of course.
Yeah, well, I still think that the major risks are around the trade policy, around the geopolitics. But then, of course, especially for industrial sector, it can be a positive risk of investing more on defense in Europe. It can turn out to be more positive than we at the moment think. So I think the risk picture is somewhat balanced between the positive opportunities and then negative risks at the moment. But of course, the uncertainty around the development is higher than usually, mainly because of the geopolitics and the trade war situation. So I think the risks for next year, next 2 years are pretty similar that have been there for some time, and those are the major things. Otherwise, I think the overall sentiment is quite good and balanced for European countries. But of course, the European problem somewhat is quite weak long run growth. So going forward and looking longer run, the problem here in Europe is that the potential GDP or the long run GDP growth is quite low, which is of course then a problem for European countries going forward. But for next few years, the economic cycle is, I think, there are reasons to be quite optimistic at the moment. Then of course there are those basic things which are good to follow, like the interest rate development, which of course have major impact on how companies do business. But at the moment, markets are actually expecting that the interest rate development will be quite stable, and we are expecting that ECB have at least is very close to end its rate lowering period or cycle, or probably have already stopped lowering the interest rates, and markets are expecting that the interest rates will stay quite stable for next few years. And then, of course, for Baltic states, especially the inflation situation, since the inflation is somewhat elevated still in the Baltic states, so it is something to follow. We are expecting that the inflation in the Baltic states will come down in the next few years, but still for next year we are expecting that the inflation will be a touch over the 2% target level. And then, of course, I'd follow myself the confidence indicators, especially the households and confidence, because the private consumption, at least in my opinion, is the main driver of growth in all of the Baltic states. So it needs that the confidence indicator picks up, especially in Latvia and Estonia. In Lithuania, the confidence is in a better shape at the moment. So the lack of confidence is mainly in Estonia and Latvia, especially in Estonia.
Okay. Yeah, I guess it's also a psychological factor that if you feel confident in your personal life, then you are also taking bolder decisions in business life as well. But thank you. That's calming information. Maybe one more question. Do you see any opportunities or maybe industries where you see that could be growths or shifts or something what could be unexpected or maybe for you expected?
Well, since the European countries are increasing their defense budgets quite a bit during the next few years, of course, those industries that are connected to defense production will somewhat benefit of the situation, especially next few years. And then also I'd say that since we are expecting the pickup in private consumption and domestic demand, also those companies, service companies and retail companies that are in consumer business might benefit from the recovery of households consumption, especially for next 2 years. I'd say those are the main areas I am expecting to see some kind of growth.
Okay. Thank you. Maybe something what you would say, what we have to watch for at the end.
Yeah. Well,
of course, we have to follow you and read the sentence.
yeah, that's the easiest one. But I think the consumer confidence indicator tells a lot about the overall sentiment of the economy, especially now when there are some problems with confidence, and there are still quite a bit of unconfidence and different things happening all over the world. So I would follow the consumer confidence indicator. Then for global economy and the international economy, I say that the purchasing manager indices, which are surveys of large businesses around the world, they they give quite good indication what's happening in the global economy. And then, of course, for Baltic states, which are small open economies, and the role of international trade and especially the exports is quite significant. I would follow the world trade, how the world trade grows, because it is such an important thing for the Baltic states, how the world trade develops.
Okay, thank you, thank you. That's really nice to hear that you are calming us down. That not everything is so bad as sometimes in mass media and so on. So thank you so much, and I hope it's not the last time we are seeing each other. And thank you so much.
Thank you.